Most traders believe they are only one strategy away from success. One better indicator, one better entry, one better signal, one better prediction. They think the missing piece is somewhere outside of them, a secret setup, a hidden pattern, a smarter way to read the chart. But the market does not destroy most traders because they cannot analyze price. It destroys them because they cannot control themselves when price moves against them. The real difference between the losing crowd and elite traders is not intelligence. It is not technical analysis. It is not even confidence. The real difference is invisible. It is behavior under pressure. Because trading is not only a game of charts, it is a game of fear, greed, ego, patience, discipline, and uncertainty. The market does not simply reveal where price is going. It reveals who you become when money is on the line. The crowd and the elite are not two social classes. They are two operating systems. The crowd reacts. The elite prepares. The crowd wants certainty. The elite builds rules for uncertainty. The crowd wants to be right. The elite wants to survive. The crowd is driven by emotion. The elite is guided by structure. The crowd asks, "What will the market do next?" The elite asks, "What will I do if I am wrong?" That one question separates gambling from trading. When the market is calm, the difference may look small. Both traders can talk about strategy. Both traders can draw levels. Both traders can explain a chart. But when a position turns red, the difference becomes brutal. Because pressure does not care what you know. Pressure reveals what you actually do. And in trading, what you do under pressure matters more than what you believe in comfort. A loss is the great separator. For the crowd, a loss feels personal. It feels like humiliation. It feels like failure. It feels like the market has attacked their identity. So they do what most people naturally do when their identity feels threatened. They defend themselves. They move the stop loss. They average down without a real plan. They open another trade to get the money back. They blame the news. They blame manipulation. They blame the market. They blame everyone except the person who clicked the button. But deep down, what they are trying to protect is not their capital. It is their ego. The elite trader feels the same pain. They are not robots. They are not emotionless. They do not enjoy losing money. They do not enjoy being wrong. But they have trained themselves to ask a different question. The crowd asks, "How do I get my money back?" The elite asks, "Was this loss inside my system or outside my system?" That question changes everything. If the loss was inside the system, it is not a disaster. It is not an insult. It is not a reason to panic. It is simply the cost of doing business. One trade, one data point, one event in a long series of probabilities. But if the loss was outside the system, then the problem is not the market. The problem is behavior, and behavior must be corrected before the next trade. This is why elite traders review their losses. Not because journaling is magical, but because a journal does something most traders avoid. It forces honesty. It turns emotion into evidence. It turns pain into feedback. It turns a bad trade into something that can be measured, studied, and improved. The crowd avoids the journal because the journal does not allow excuses. It shows the pattern. It shows the repeated mistake. It shows the exact moment discipline disappeared. Most traders do not only fear losing money, they fear seeing the truth about how they behave when they lose it. There is one pattern that appears again and again among struggling traders. They cut winners too early, and they hold losers too long. When a trade is profitable, they become afraid. What if it reverses? What if I lose this profit? What if I should take it now? So they close the winner quickly. They feel relief. They feel safe. They feel smart. But when a trade is losing, something strange happens. They suddenly become patient. Suddenly they believe in the long term. Suddenly they talk about conviction. Suddenly, every warning sign becomes temporary noise. This is the emotional trap. Profit feels fragile, so they protect it too soon. Loss feels unacceptable, so they deny it too long. And this creates the most dangerous equation in trading: small wins, large losses, small wins, large losses, small wins, one catastrophic loss. The crowd does not blow up because every trade is wrong. They blow up because one uncontrolled loss becomes larger than all the disciplined wins before it. The elite trader reverses this equation. They accept small, controlled losses. They give winning trades enough room to breathe. They understand that the goal is not to feel good on every trade. The goal is to make the math work over time. They do not need to win every trade. They need to avoid the one trade that destroys them. This is where most traders misunderstand risk. The crowd treats risk as a feeling. The elite treats risk as a number. The crowd says, "I feel confident, so I will go bigger. I just had 3 wins, so now I understand the market. I lost the last trade, so I need to make it back." But confidence is not risk management. A winning streak does not make the next trade safer. A losing streak does not mean the market owes you money. The market does not remember your last trade. The market does not care about your account balance. The market does not care that you are frustrated. Every trade is independent, and every trade has the power to punish emotional thinking. The elite understands one thing deeply. Risk must be decided before desire appears. Before entering a trade, they already know 3 things: where they are wrong, how much they can lose, and what they will do if the trade fails. They do not calculate risk after entering. They calculate risk before the trade begins, before hope gets involved, before fear gets loud, before the ego starts negotiating. That is why elite trading often looks boring, because the most important decisions were already made before the pressure arrived. The crowd enters first and thinks later. The elite thinks first and enters later. The crowd is addicted to action. The elite is committed to execution. The crowd wants the next trade to change everything. The elite knows that no single trade should have the power to destroy everything. That is the invisible difference. The crowd looks for opportunity. The elite first looks for risk. Most traders do not lose only because they are wrong. They lose because they cannot stop. They confuse activity with progress. They think every candle is an opportunity. Every breakout must be chased. Every dip must be bought. Every move must be captured. Every missed trade feels like a personal failure. This is how overtrading begins, not as a strategy, as anxiety. The trader is no longer looking for high-quality opportunities. They are looking for relief. Relief from boredom. Relief from regret. Relief from the fear that someone else is making money without them. But the market does not pay you for being busy. It does not reward you for staring at the screen longer. It does not care how many trades you take. The market rewards correct execution, proper risk, and patience at the right moment. The elite knows that not trading is also a position. Waiting is not weakness. Waiting is a filter. And sometimes, the most profitable action is no action at all. The crowd cannot stand silence. Silence makes them feel like they are falling behind. So they force trades. They lower their standards. They break their rules. And then they call the result bad luck. But it was not bad luck. It was impatience wearing the mask of opportunity. This is one of the hardest truths in trading. The market offers endless chances to act. But not every chance to act is a real opportunity. The crowd trades because something is moving. The elite trades because their conditions are met. The crowd trades to escape discomfort. The elite waits because discomfort is part of the game. The crowd fears missing the move. The elite fears taking a low-quality trade. And that difference changes everything, because the trader who cannot wait will eventually be controlled by the market. But the trader who can wait forces the market to meet their standard. Another invisible difference is loyalty. The crowd becomes loyal to positions. The elite remains loyal to reality. Once the crowd enters a trade, they start collecting evidence that proves them right. If they are long, they search for bullish news. If they are short, they search for bearish opinions. They ignore the structure, they ignore invalidation. They ignore the fact that the original reason for the trade no longer exists. At some point, the trade stops being a trade. It becomes part of their identity. And once a position becomes part of your identity, cutting it feels like cutting a part of yourself. That is why the crowd holds. Not because the data is still good, but because admitting the trade is wrong feels emotionally expensive. The elite does not marry a position. They can change their mind without drama. If the facts change, they change. If the structure breaks, they exit. If the thesis is invalidated, they do not negotiate with hope. They are not trying to prove they are right. They are trying to stay aligned with reality. This is one of the hardest lessons in markets. You can be intelligent and still lose. You can be informed and still lose. You can have a strong opinion and still lose. Because the market does not reward opinions. It rewards adaptation. The crowd says, "I know this will happen." The elite says, "If this condition fails, I am out." That one sentence separates a belief from a system, and systems are what protect traders from themselves. A stop loss contains hope. Position sizing contains greed. A checklist contains impulsiveness. A journal contains denial. A trading plan contains ego. The elite trader is not someone who has no fear. That person does not exist. The elite trader is someone who has built a structure strong enough to act correctly while feeling fear. They still feel the urge to move the stop, but they do not move it. They still feel the temptation to chase, but they do not chase. They still feel the pain of being wrong, but they do not revenge trade. That is not emotional suppression. That is emotional containment. From the outside, elite execution looks effortless. But effortless does not mean easy. It means the hard work was done before the pressure arrived. The crowd works hardest during the trade. They enter first, then they panic. They search. They ask. They adjust. They hope. They react. The elite works hardest before the trade. Before the session begins, they know their key levels. They know their invalidation points. They know their risk. They know the scenarios they want to see. They know the trades they are allowed to take, and they know the trades they must avoid. So when the moment arrives, they are not debating with themselves. They are executing a decision that was already made in a calmer state. That is the hidden secret of discipline. Discipline is not just willpower in the moment. Discipline is designing the moment so willpower becomes less necessary. The crowd believes trading should feel exciting. The elite knows that good trading often feels boring. Boring means you are not chasing. Boring means you are not gambling. Boring means the process is in control. Most traders come to the market looking for freedom. Financial freedom, time freedom, emotional freedom, the freedom to escape a life they do not want. But because they have no structure, they become slaves to every price movement. Controlled by green candles, controlled by red candles, controlled by news, controlled by comments, controlled by fear, controlled by greed. The elite is different, not because they control the market. No one controls the market. They are different because they control their response to the market. That is the only real control a trader has. Not the next candle, not the next headline, not the next breakout, only risk, size, rules, patience, discipline, execution, and the ability to stop when the system says stop. Freedom in trading does not come from doing whatever you want. It comes from no longer being controlled by every impulse you feel. So the next time you enter a trade, do not ask only, "Where will the market go?" Ask a better question. What will I do if I am wrong? Because that question reveals whether you are trading with a system or trading with hope. The crowd seeks certainty in an uncertain game. The elite accepts uncertainty and controls what can be controlled. The crowd wants the market to prove them right. The elite is willing to be wrong quickly, small, and without drama. The crowd protects ego. The elite protects capital. The crowd trades to feel better. The elite trades to execute better. And in the end, the market does not reward the person who wants to be right the most. It rewards the person who can stay rational when being wrong is painful. Most traders do not lose because they lack a strategy. They lose because, under pressure, they abandon the strategy they already had. They abandon their rules. They abandon their risk. They abandon their patience. They abandon themselves. The market reveals the trader. And before you can beat the market, you have to stop being defeated by the version of yourself that appears when the trade goes against you.